What's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. We're going to be talking about growth stock, EVs, and tech. And in this case, they're all one and the same. That more in a second. Webull. Enjoy hours of pre- and post-market trading. Stocks and cryptocurrencies all in one app. Finally, a phone-friendly, easy-to-use trading app that helps you become a better trader. Soon you'll be trading like a pro. Webull, the future of trading. Click the link below in the description. Deposit $100 and get 2 free stocks worth up to $1,850. Before we get started, if you're new to the page, go ahead and hit the like button, the subscribe button, and the notification bell. And if you've been blessed by anything I've provided, go ahead and hit the like button. It helps to keep me alive. Thank you. Losing my voice again. All right, so we're going to talk about growth stock. We're going to talk about EVs. We're going to talk about tech. Really, we're just going to talk about EVs. Now, the lines have been skewed with EVs and tech because if you look at Tesla, Tesla is not just an electric vehicle company. It is a technology company that makes electric vehicles. And in my portfolio, these are my growth stock. These are some of my biggest growth stock, and I know for a lot of you, it's yours. So what I'm going to do is I'm going to look at a couple of EVs, and you can apply it to your growth stock, right? And you want to apply it to your conviction, your high conviction growth stock, things that you know that are coming down the road, right? And for myself, I invest a lot into the future because I don't need a return right away. And some of the stock that are beaten down right now, the tech and the EVs, I know they're going to be good in 2023, and they're even going to be better in 2025. So I'm patient. We all have to retire on something, okay? So growth stock that we invested in 2020, and we made a ton of money, but a lot of us got caught because we wasn't doing any profit taking. A lot of them, we were paying a premium for future revenue. They weren't making any money yet. They were spending more money than they were making, right? And so we were investing in companies that wasn't even cash positive yet. And so now when we go through a correction, the ones with the insane PE ratios are the ones that got hit the most. Those were tech, right? And so that's one of the things that happened. There's a lot that's going on. High interest, inflation is threatening, taxes is threatening. We know all of those things are happening. But even if those things didn't happen, a lot of these companies would have been in trouble because the price we were paying for these stock were just outrageous. And on some of them, I was cool with it because companies like Tesla kind of changed the game a little bit. So let's look at Tesla. Tesla went for 18 years before it came profitable. 18 years it took Tesla to become profitable, right? So we know that Tesla is in profit now, but let's look at the beat down horse known as CCIV or Lucid Motors. Here's what we want to look at. When will CCIV, Lucid Motors, be in profit, right? When will they be in profit? This was Lucid Motors delivery, right? This was the delivery. They're projected to deliver 135,000 by 2025. But let's look at where their rev is, the revenue. As you could see here in 2022, there is no rev. In 2024, here, we start to make a little money. But by 2025, we're making a lot of money, right? That's when we're in profit here, right? Let's look at free cash flow, which is important. We're not going to go into the EBITDA. Let's go to free cash flow. We hit it right at 2025 where we're positive free cash flow. No tax, pre-tax, after taxes and all of the EBITDA stuff. We got free cash flow of 321 by year 2025, right? And so what's going to happen is the stock price is going to go up 2022, higher in 2023, and then much higher by 2025, it being cash flow positive. I can hear some of you guys saying, if everything goes correctly, you are correct. All right. So let's look at this. This is just a projection year over year, month over month of where they see NIO stock being down the road. Remember, all of the EV companies got hit with a chip shortage, but the chip shortage will soon be over, right? I believe that the chip shortage will be a thing that they have a good handle on by the end of Q3, and then Q4 will be good for EVs. I'm praying that nothing else happens. But opening price, closing price, minimums and maximums, okay? So let's go over here. Let's go to June. And we're talking about $82 to $85. Let's go to June in 2023. Okay, we're talking about $126 to $130. Let's go to 2024 of June. We're talking $170 to $173. And here's my year, June of 2025. $214 to $217 per share. So now what I want you to do is look at that $33 and realize that it's not that bad. And I don't care if you bought it at $37. I don't care if you bought it at $40. All you have to do really right now is to be patient. Let's look at what tip ranks say about NIO in the next 12 months. Tip Ranks has NIO at $60 as an average, right? This is Tip Ranks Tuesday. And so they have NIO at $60 a share as an average. These are some of the top performing analysts. A lot of them are banking analysts, right? As you can see here to the right, they have a high of 81 and a low of 38. Right now, even if we hit the low right now, we'd be good, right, good people? But a rolling average of $60 per share. That's a $77 a 77% upswing from where it is today. I get it. You're afraid to sell right now because some of you guys been dollar cost averaging in. If you trade right now, you're going to have a wash sale, and that was a waste of time. So you think you'll put in an order and you think you're buying it at one price and you're buying it at a higher price. So we don't want to do that. And then what happens if you sell and it runs up? So you're just kind of stuck. But every day it just seems like it's just one bloodbath after another. But what I'm doing, remember, I'm not your financial advisor. I'm just telling you what Larry is doing. I'm looking to the future. And as I look to the future, I'm actually cool with what it looks like down the road, right? So it's like a doctor. I've had surgery. A lot of you guys have had surgery. Surgery don't feel good. It hurts. But you're going to be better afterwards. And so here's where we are right now. We can't do anything about the past. We can't undo. No one had a crystal ball to predict everything. If anybody said they knew exactly what was going to happen, when it was going to happen, good people, they're lying to you. No one knew. But here we are. No one knew about the chip shortage coming in and the fire coming. Retail investors, insiders knew. But here we are with these high growth stock. And I want you guys to apply this to any of your growth stock. I'm using EVs. And I want you to look out to 2023 to 2025. And I will tell you that a lot of the money that we're going to make is just going to be life-changing. It is literally going to be life-changing for those of us that have a lot of EVs in our portfolios. And so what I would tell you is not to continue to only get EVs. We've had to learn our lesson and know we need to, diversify our portfolios, right? And so that's what I wanted to just shine a light on, talking about what's difficult to talk about in times like these. And, I've been telling you guys for the last few days, I'm not buying anything right now. I'm good with where they are. And so I want you guys to make money. If you just got in the market in the last 30 days and you've been buying these stock, what I'm going to tell you is, for me, and I would suggest to you, remember, you have to do your own research. I'm going to suggest to you to just hold on and know that you will be making money over the next few years, right? And so I just want to leave it right there. And listen, it doesn't matter what stock it is. If it's a good company, a high conviction stock, everything is fine, nothing has changed with the company, everything has to do with this market, then you'll be okay. Because after a bull run, after a correction, and then after a bear market comes a bull market, right? And then we'll start to climb out. So I wanted to show you guys when these companies hit revenue, because that's when the PE ratios start to really make sense. We're paying for those right now. And we just got caught, good people. Let's tell it like it is. I don't want to just give you stock every day without you guys learning how to fish. I don't want to just feed you fish. I want to teach you how to fish. All right, good people. If you see any correspondent below, I have to say this on every video. Listen, good people, not just on my page, but on anybody's page. Talking about a WhatsApp, a phone number, or talk to my broker. It is not me. It's spam. Do not engage. All right, good people. Hey, we got green pastures to look forward to. All right? Keep your head up, good people. We talk to you later. Live, love, laugh, and learn.